I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is Monday, November 11th, 2024. Hope you had a good day, good weekend here. So what do we have? Well, we had more of a broadening speaker here. So we gapped up right here, pushed up, got 3 drives here. Boom, came down and came underneath. They want to pretty much a Monday looking like as a bearish day. You have 2 reasons to sell today, only because of the fact that it can create the wick of the week if it's bullish, and also Mondays generally would like to come back down and wipe out any late buyers and liquidity. So plus we have a gap here, so we want to keep that candle down, so it'll be a pretty much resealing the gap on the body for the day. If you look at the daily chart. Now I'll try to make this video simple because it pretty much is cut and dry, but as far as where we go is not. But anyways, so you can see here we remember that all-time high originally from July 11th. You can see that's dragged out still. We're going to be using this in this area. You can see we come underneath it and use it as resistance and come down for a couple legs, so we can get into this previous Friday's low, right? Balance more of that gap right there, and they did not touch this gap right here from Thursday at 9 o'clock. If we go to a 4-hour, you'll see that we didn't tap this gap either right here to 6 o'clock from the 7th of Thursday. So that's the question here. Very, very nice though. If you take a look at the speakering here, we mentioned this actually on Thursday, that we would speaker out here, and then as we come up here, we're now broadening still with the same formation here. Higher highs here, and then you get your lower lows from there, and there. So again, right back to kind of like the medium of the range, right? And we're now in this range from this high to this low. So if you take a look here, we'll just do some ranges real quick. From this low, whoops, that's not what I meant to do. From this low to this high, we'll take a look here. As we are, well, I'll just show you that. Why am I doing it that way? Well, this is an internal liquidity, and this is external because we come outside, right? So this is the range. This low takes out liquidity here, and then obviously this high takes the liquidity to the left. Where were your writings on the wall here? You obviously had the 3 drives. So what's the setup here, right? So you get the 3 drives here, and then also more importantly, we take out this liquidity, we raid that. It's a 5-minute chart, probably just stay on a 5-minute chart here. But let me zoom out. So we have that raid there, plus we have the opening gap. I mean, that's like major, right? And then plus the liquidity to the left, to the downside here. Well, let me try to zoom in. All this nonsense. So sure enough, we're hunting it. So 9:30 here. Look, as you see, when we raid here, that's already flag 1. Flag 2, well, flag 1 is the gap, right? Flag 2 is the raid with the 3 drives, right? Step 3, what's that? Well, you have this imbalance here. So you have a balanced price range, this up candle and then this down candle. No opportunity to get in, straight breakthrough. That's a big sign of weakness, right? And they're in a rush. Then you get this little you get this little lower low, lower high. You get this lower low, lower high. This becomes a control and price right here. It's 905, and then 930 opens up. So pushes up, just tries to get that last candle here, rejects it, doesn't even take out that high. Look at this. Doesn't take out the high. I'm talking about the 930 candle. That doesn't even take out that high, right? Take a look here. Of the 925 I'm talking about. Gets into the wick. It's a rejection, right? So supply wick, right? So it literally doesn't go any higher. So that's another key factor of the order flow. But and then sure enough, shoots down. So obviously you have this built liquidity here from all of Asia and London, right? And then sure enough, all higher lows. So another obvious reason of selling. Now, if we're really, really bullish, I can understand somebody saying, oh, well, I thought it would have been a buy, blah, blah, blah. But look at the opening range gap. You also understand that opening range gap. How many points was it? I forgot. 230. Yeah, that's about 50 some points. That's not It's not that great, but again, understanding that that's down here. Plus the main understanding is this, right? So anyways, if you had caught the sell or you were in before, great. I would have definitely held it below this gap, plus or at least the opening range gap there. So then when we come down here, so now I'm going to go back to the ranges here. So I know I have to squinch up a little bit, but as you see, that's the range from higher low to higher high, so to speak. And sure enough, look where the top 25% is. We're sitting here dangling right here, and sure enough, 930 pops up right here. It's still sitting at that 25. That's the best entries you can possibly get. Plus that previous, look at this imbalance right here. It is 910. I didn't mark that out, which I'll just do it now. And try to make this quick. And this was also the precursor of that 930 open. Also, if you had that marked, jeez, let's go. All right, so this right here, this will show you the order flow too, right? So if you didn't get into 930, that's fine. You waited for order flow. It's no big deal. Pushes all the way down through, comes down to here. So remember, this entries are above this 25%, right? This top 25%. Then at the 50 mark here, you come down here, and then we get a push up. All immediate rebalances. So this is also another key factor. You could write all this down. I'm not going to do that. You should be the one writing this down. But you can see we're constantly sealing the previous candle. We don't break them, but we seal them, right? So no imbalances there, and that's a good sign for if your order flow is being bearish. So and sure enough, boom. Then we get this imbalance right here. Obviously, this 940, can't miss that. Where is this imbalance? It's at the 50% of that range, right? You see that here on the 15-minute here. And then we blow through, right? We get to the bottom 75%, right? And then if you look to the 15-minute chart here to the left, we pretty much wipe out all this right here. These swing lows right here. These are all for late early buyers, I'll call them. And then they shouldn't have taken them out. And then sure enough, this is a beautiful lower low. And the thing is you're not buying here to hold only because of the fact that we want to take out this Friday low. We had the imbalance here to seal up, and potentially even lower. But in general speaking, once you went below the opening week gap plus that level of the all-time high in the green, we're coming back up. Look how we come back up here. We hit the 75%. We come back up. Before we do, we tag this last down candle, this 10 o'clock right here. So that's the new 4-hour candle. We pop up. We retrace back right into that down candle. Real beautiful. There's a gap in between this 9:55 and 10 o'clock. You gotta look at these details. See that? So, and then, what's it called? And what's in the factor here? Time. You have the macro here for the 950 to 1010. When does this? Look at this. This dips in here with that opening price right there. Beautiful, and then shoots up. Now, what does it do? So it shoots up here and comes where? Well, it comes back to the opening range gap with the opening week gap plus that all-time high level from July. And we have this bearish imbalance. Yeah, I mean, X marks the spot here, right? Look at the bodies here, literally stopping on a dime on that bearish imbalance of the 940 right there. Beautiful. And then we're also, all this price action is at 50% of the weekly gap, current weekly gap, plus of the range. This is a sell model, right? So sell model right here, push up, come back down, and takes out liquidity. So, and we're above 50% of that range. Ranges are meant to be broken, obviously, right? So beautiful area, man. And then sure enough, if you're not entered here, you wait for order flow here, you get this bullish down candle. You're like, okay, well, this is a bullish imbalance. Why isn't it holding to push up higher? Because of the fact that they came down to wipe out liquidity to the left. They're coming up to wipe some liquidity to the left, which would be the sellers. But this is acting as a resistance, and you're looking for now this to be another sell model into this bigger sell model, plus a retracement to wipe out more liquidity. So you're looking at this as a lower high, but it's fine. if you're waiting for order flow here, well, then you're going to look at this as an inversion if it fails, right? So this big bearish candle is also not what you want to see if you're buying this bullish imbalance, right? So that's another factor. We close below it. That's not a good sign. Like if it tapped in and oops. So if it tapped in and then went away, that's a little bit different conversation. But we didn't get that. We're getting the close below. Now again, it didn't break this low, which is the original 1030 candle of the imbalance, which technically would be the 1025. And I understand you're like, oh, well, hit this down candle and all that, and I get it, right? But that's why you don't do anything, because of the fact that you're bullish, but again, what we've just discussed previously. So what's it called? Then we get this push up here with this 1055. We tag right back in. Look at the tagging of. Let me make this stronger, I guess. Let's just make it darker. I think that's helpful, right? All right, so you can see here that we tagged the low of that candle. So we understand that this is in control, right? This 940 in bearish imbalance, because again, it's a retrace, right? So anyways, what do we do? Well, if this wasn't helpful here and you didn't understand that, well, then from here, as you see, we break. I'm just gonna do an imaginary trend line here. As you see here, when we break through that, it comes underneath and retests, right? So, sort of speak, but it's really, if you look closer, it's really retesting. Look at the body stopping on a dime at that bearish imbalance at that 940 again. Look at that. So then we're breaking lower, and this is not what you want to see. And if it's hanging along, if it's inside that the bullish imbalance for too long, that's not good for your bullish scenario either. So then we break below it. Now bodies are below. They're slithering down, I call it, with the bodies. And then this candle right here, this 12 o'clock, it's lunchtime. Now it's looking for liquidity, pops up. You're underneath 50%, close below, and then we rush down, right? Slowly, I guess. And so on. So just to give you the understanding here. But time was in the factor here, but also you have time in the factor here. Because here, this is the 1055, right? So the macro kicks in from the 1050 to 1110. And sure enough, all this is happening here at that window, right? So then it shoots down. Here, if you take a look over here, we also have the same scenario from the 1150 to the 1210. So, lunch, sure enough, on the head, 12 o'clock, just starts to rush for liquidity. So, and then again, where is all this price action happening here? It's above the 50%. Now we come below. Now you're at remember we're in this range I was talking about. You're at this bottom 25% here, and you take a look. We start poking up here and not going any higher, and it's all tagging this level as well. See that? Then we shoot down. We aggressively come down. We get the 3 drives. Beautiful. 1, 2, 3. Excuse me. 3 drives here. You got to oversold here. And then you get the nice divergence there. Look at that. Beautiful. So that's generally the case what you want to see. And look, and if you watch my videos, you know I talk about this all the time. This low here ends up matching with now the oversold here, but we have a divergence, right? Beautiful. We've also came and took out liquidity. And then you've balanced more of that hourly gap that gets sealed. And this is a beautiful fucking buy. Excuse my language. But anyways, and then you see we get the 3 drives here. 1, 2, 3 bodies, kind of respecting, and then push up. Boom. And this, they don't let you get in. I'll go to a 1 minute real quick to see it. And you can see how it looked like here. And as you can see, drive 1, drive 2, drive 3. And then here, if you're looking to get in here, well, besides the 3 drives, then you get a divergence here on the 1 minute. Beautiful, right there, right? You had the 3 swing lows. 3 swing lows. You have the swing low here, and then sure enough, price is aggressive. Now, if you're not in here, obviously it's difficult to do that. But if you understood the framework, no big deal. I'm not expecting you to do that, or anyone for that matter. But then where do you see a possibility to get in? And it's right here, obviously, right? So let's just drag this out, and then let me just change this to a bearish inversion here. And you can see that. So we push up here, we close, it's a balanced price range, we come back down, and pretty much hanging in there. And then if you take a look here, we'll also have, and I'm mentioning entry methods here. If you look at this candle here, this 122, you can see at 50% here, we do tag that. So, well, not the best drawing, but that's probably 50% right there. Just eyeballing it here, but there's just little details here. And then sure enough, it's just going to take off, right? So, as you see, 50% of the actually hour gap here, if that hourly gap, this is an hourly gap. So you see where you think it's resistance or something at the moment, but then we just blast through, and that's a signature that don't really want you in, right? But I feel like I'm missing something here. So then it's taken off. Now to take this by, where would you take this to? So we obviously have a new range. Let me move this from here to here. In general, I'm talking in general speaking. I don't care if it's right or wrong. It's in general speaking. This high took out that liquidity, and then this low gets taken out by that liquidity. So you have external for the range, and in general, it's external and internal. But this is where it's going to get a little shaky, and see what we do here. So while we're coming up here, and you understand that you're in this range, right? We're pushing up, and then we retrace back. Where does it retrace back to? It just got done explaining the same example. 25% here, and then we tap this inversion right here. I'm not going to draw it out, but as you see, slithering up, right? So it's just they're constantly bullish candles, and they don't take any previous candles. So anyways, we pop down, we take that out, and then we push up for another leg. Now we're at 50%. So when you buy this, you have a minimum target of, first of all, it's this level right here. Minimum is this low. Because when you broke through, that's a nice breakout trading level, number one. Plus it's coupled with no wick right there and a gap. Okay, where's the next level here? Well, where's my swing? Where's the swing high? Well, you got a swing high right here. And you got one right here. But look at these candles coupled here. 1, 2, 3, 4. Those are right there. All lower highs here. Very smooth. Plus an imbalance right above. That's a nice target there. That's why you see it shooting right to it, right? And then anyone who broke through this level, as it shoots down, that's a breakout trading level. So these would be my minimum target for this area. Plus it's above 50% of this high and this low. So this is just fucking basic price action to me. But then now at this point you're like, oh well, this is a lower high. So you had lower low, lower high, lower low. So sell, buy, sell, buy. You have dump, little pump, and then dump again. And this is exactly what I'm looking for, especially on a Monday in the situation we're in. Very logical, very simple. So dump, smaller pump, and then if you're bearish, you'll look for an extra dump. So nice sequence there, right? So very, very logical. So pushing sell here is with your eyes closed was not that difficult, to be honest with you. But but here you're like, oh, is it going to keep going up from here, or is it going to keep coming down from here? Well, again, that we have these confluences there, and if that wasn't there, obviously this would be a different conversation. But so now what do? So we're coming up here, and we just rejected that area here. Is this going to go for another leg down, or is it going to come above here? Now I'm talking bearish. Damn man, there's no way to make. I can't make videos short. I talk too much. I don't know. I don't know. Well, before I even get to that, let's just look at here. So you'll see. Oh, well, actually, this is a 1 hour. So you'll see that we had lower lows here with Dow, with Nas, and then we had higher lows here with S&P and Dow. So that buy is really what I'm aiming at here to talk about. So let me go to a 5-minute here because that's more helpful for me. So here, when we're up here, we all had taken out previous highs, except for Dow, right? Yeah, no, yeah. Yeah, they did too. Yeah, so we were all in agreements with like taking out the previous day's highs and shit. But we have that gap, so that's the big deal for trading us. But then you see here we get this price action here, and then you get a nice little raid right here at 9:30 with S&P, as you see that, right? And then Dow, I'm talking Dow, Nas had a lower high right here. See this? See this from here to here? See the lower highs here? So technically, technically I should be putting this on, um, on here, because at that time you also had, to me it didn't matter though. I wasn't looking at that. I was just looking for the divergence between S&P and Nas, to be honest. But as you can see here, we're got higher highs here too. So I'll just leave it there and change this color to red. All right, lower highs there and just flown through. Beautiful. So we push down here. We get obviously the lower. Well, at this time here, we let me see here. So we took out the liquidity, and then we had higher highs here, and we had higher highs here. So I'm not going to draw it, but at this time we also took that out too. So that was a beautiful buy as well. And then let's see here. When we were up here, we had lower highs there, and not really helpful there. But we did have a nice divergence here. So I'll just draw it out here, I guess. Wasn't like that great or anything, but that right there. So anyways, push down here, and then once we came to this low, with taking out that low, we had higher highs here, and we were all in agreement. S&P and Nas were in agreement, and then boom, that was the beautiful buy right there. Again, taking that buy, it wasn't, it's not just here. You can also come back to to this range from here to here. You can also come back to this 50% here, because now we're in this range from there to there. And honestly, this could be a position trade to hold it, to keep going, to get back into this 930 area where everybody broke through and got easy trades. So here's the thing, with the news this week. So this video was made on the 5th, right, of November. So we're talking about pushing up here, and then once we push up, take out the highs, and then we retrace back, right? Obviously this was deep, but the logic here of pushing up and retracing is still in the cards. But let me go to a weekly chart real quick so you could understand what I kind of meant too. So just like this, like just kind of when we made highs and we retraced back, we pushed up here. So look at this candle here. Like this is kind of like where we are, in my opinion. Like we're right here. So this candle pushes up and it takes out the high, and then the following week starts to push up, possibly. Well, forget how long it takes or duration. I'm just talking about the movement. We push up and then we retrace back with this candle into that weekly imbalance, and then we tap that candle and then we push up then, right? So this is kind of like what I'm talking about. So now we're here. Let me zoom this in a little bit. So now we're here. Okay, so we're here, right? So does here's the thing with what I was projecting. Does this push up more, right? Does this push up more and then retrace in? Or does it pop up like it did now and then retrace back in and then maybe get into the previous month, which would be October, and then you have this little space in between here for an imbalance? Or, I don't know, obviously. What I would like to happen is I would like for it to just come down right now and then get into and to seal this. So if you look to the right, where would that be? That would be on this daily chart right here with this daily imbalance at the push out traders. That's kind of like what I was talking about. And then we're also inside this daily imbalance here of the Thursday, right? We just tapped in and we came back up. So this is the thing. We don't know, but are they going to dangle this carrot here? If you ask me, I feel like they should just come down. Well, at least another time, before going back up. But with the November seasonal data, the thing is that now we're going into the next 10 set of days. So we have the first to the 10th, then we have the 10th to the 20th. Then we have the 20th to the 30th, just to kind of keep this simple. So the 10th to the 20th is which we're now in. It does show a lot of consolidation, and it does show us retracing back more. So I would expect it to do that, right? And if we do that, which is coming back down again into this area here, um, you know, is this going to sell from here? Or are we going to pop up in here, get out the breakout traders like that blew through here, and then do we roll over? And I'm giving you the bearish scenario, right? If we're bullish, and if we're in this scenario where we have another push up before we get that big retracement, and they use the news, which is what we have this week. We have nice bank holiday, by the way, beautiful trade. But people don't like trading them. I don't like to trade them, but there are plenty times where they're beautiful and it's so easy going. Tuesday, tomorrow, we have CPI on Wednesday. So the issue with that is that this could be a decent trading day unless they want to hold the market. Wednesday, I would definitely probably stay away from Wednesday. That's my opinion, but and then Thursday and Friday could be decent trading days, right? But that's kind of like the outlook for the week. But and as you'll see, Nvidia, same idea I was mentioning here. Well, we made highs and then we kind of retraced back. So in this scenario here, like we made highs and we were retracing back. See how we came back in and you break through traders. Now, are they done? Or do they want to push up one more leg before they come back? Kind of like this. When we made a high, we retraced back, right? It's kind of like where we are exactly right now. Do we push up higher to then fail and come lower? Which that takes some days in this week to fall lower. Or are we going to just bust through? So here is a pretty, not that great of a place to be honest. But again, if you were asking me what I would like to happen, I'd like to just come down one more time, and let's just then buy up one more again. But with this month being so so much that is possibilities with this news too, I just feel like they're gonna drag it down. I feel like it's something like this, right, where they drag it down, not even getting up this high. I feel like we're just kind of like, so just this price action here minus this little poke above. That's what I'd like to see. If you ask me, that's what I'd like to see. But I'm kind of trying to see if they do something like this, right? Would come down like this, and then we'll push up for the last 10 days, which would be, now you're talking about November 20th, and on, right? To then push back up to keep going. I feel like I'm talking too much now, so I hope that makes all sense. So basically, what I'm saying here with the understanding is, like, if we're bearish, then we not bearish, but like if we're doing a big retracement, then we come back down, right? Like this, very obvious. Or we come above, get into here, right? We get into there or something, in a discount if it's bearish, or I should call this a premium. At that top 25% of the range, or do we leave that open? That's really the big question. I'm sure Asia will kind of leak in though, and then that's the bearish understanding. If it's bullish, I still think this is still happening, to be honest. But if it's bullish, then it's just do we come like this, and then do we just do that, right? So that's it. That's all I really gotta say. Or coming down one more time real quick to then go up, that would be my second obviously idea of bullish. So let's just say you do this, and you take off. All right. So yeah, I mean, this doesn't seem favorable, but and then what was I doing? Dollar. As you see here, we and if you've been watching videos about dollar, there's a gap here on the daily. You had that liquidity here, very easy run. It looks like we're not too far from it. I'm expecting bullish. I'm expecting dollar to raid this. If we do get a good like bullish scenario with dollar, and then it doesn't freeze here, then we can get that big retracement that I've been kind of talking about, like in this scenario, right? But but yeah, this kind of looks really ripe. Plus that gap, it's like no price action at all in there. And then we have another push up with Dow here, and as you can see, overbought. So the retracement does make sense. I know everyone's chasing this though, but look at that, man. I mean, That is pretty wide open. So for Dow coming to here, coming down to here makes perfect sense. At least, I mean, fucking at least. I mean, yeah, maybe tap into here, but depends on how they want to move this, man. So it's just you're just at all time highs. You know what I'm saying? So that's being said, classic buy day here for Dow. And let's look at S&P real quick. So is this a speaker here too? But is this a crack, right? So is that a crack? I mean, it's still bullish. I mean, there's no question there. But that's also way. I mean, take a look. Anytime we've busted through, we've came back. Busted through, came back. Busted through, came back. Busted through, came back. Busted through. Where's your comeback, right? So it's, I mean, just logical price action, right? This makes great sense. And for them to do that on CPI and then push back up, that would make sense too. So, we'll see how this goes, man. But, again, in a perfect world, I'd like it to just, in a perfect world, I'd like for it to just fucking do this. That's what I'd like to see. So, but who am I? All right, this should be more than enough here. Damn, 31 minutes, bro. Just wow. You guys take care and God bless.